Investors, hello. This is Stock AI Insights Market Pulse, and I'm your chief AI analyst. Just a quick reminder before we dive in, this is for educational reference only and is not investment advice. You know the drill. All investing involves risk. All right, let's get right into the pulse of the U.S. stock market for November 19th. Now, the market did manage to snap a painful 4-day losing streak today, but don't let those green numbers fool you. Everyone, and I mean everyone, is holding their breath for one single event that's about to drop after the bell.
So taking a look at the numbers, we finally saw some green on the screen, which was a pretty welcome sight after the last few days. The Nasdaq actually led the charge, climbing about 0.59%. The S&P 500 was up 0.38%, and the Dow eked out a small gain of about 0.1%. This little bounce? It looks like it's coming from a pause in that big tech sell-off we've been seeing, but the key word here is absolutely pause.
Yeah, today's gains weren't really fueled by any new wave of confidence or some big shift in thinking. Think of it more like a fragile truth. It was this collective, nervous quiet, like the calm before a storm, as investors are just bracing themselves for what could be a make-or-break moment for the entire AI sector.
To really get why the market is so on edge, you have to look at the jitters that have been shaking up the whole AI-driven tech space. And this isn't just about today. This unease has been building for weeks now. When we talk about the AI trade, what we're really talking about is that whole basket of companies, the chip makers, the cloud giants, the software players whose stocks have just rocketed higher on the promise of artificial intelligence.
And this chart, well, this tells you a lot about how people are feeling. For 4 straight weeks, more money has been pulled out of technology stocks than has been put in. That is a huge signal. It shows there's some real discomfort growing among investors who have, frankly, been riding that incredible AI wave all year long. So what's behind all this? Well, it's a mix of some pretty big questions. Are we in an AI bubble? Are these valuations just getting way too stretched? Is big tech taking on mountains of debt to build out all this AI infrastructure? But the biggest question of all, the one on everyone's mind, is when is all this spending actually going to pay off? And that massive uncertainty is what's really weighing on the market.
And all of this widespread anxiety, it has basically funneled the market's entire focus onto one single event, Nvidia's earnings report, which is due right after the bell today. It's no exaggeration to say that the entire story for AI for the rest of this year could be shaped by what's in that report.
This quote from Jake Behan just hits the nail on the head. He says, Nvidia earnings are effectively a quarterly pulse check for the AI trade. And he's right. Wall Street isn't looking at Nvidia as just another company anymore. Its results have become the ultimate test, the bellwether for the whole AI ecosystem. If they show strong demand, it could calm everything down. But any sign of weakness, that could send shockwaves everywhere. Now, what's interesting is that in the hours leading up to the release, Nvidia's stock was actually up almost 3%. Now, this wasn't necessarily a huge vote of confidence. It's more like the tension building before the main event, with everyone placing their final bets. But here is the really crucial part. The options market is pricing in a massive 7% swing for the stock, up or down after the report comes out. That is way higher than its historical average. So what does that tell you? It tells you that traders are not expecting a boring business-as-usual report. They are strapping in for a major surprise. You can almost feel the uncertainty in the air. It really is a crazy amount of pressure to put on one company, right? But as CFRA's chief investment strategist pointed out, a strong report from Nvidia really could go a long way in calming down investor fears. The stakes, at least for the short term, just couldn't be any higher. Okay, so while the entire market is laser-focused on the Nvidia drama, let's not forget that other things did happen today. And we saw some pretty significant cross-currents out there, which created a really mixed bag of winners and losers. I mean, we saw a real split in the market. On the one hand, you had companies with great news of their own, like Block and Alphabet, that did really well. Alphabet even hit a new record high after launching its new Gemini 3 AI model. But on the other side of the coin, you had that broader risk-off feeling hitting assets like Bitcoin, and you saw crude oil get hammered after some weak inventory data. Let's just zoom in on Block for a second, because this is a perfect example of what the market is rewarding right now: clarity. Block's shares surged over 8% after the company came out and said it expects profits to grow in the mid-teens every year through 2028. See, in a nervous market like this one, that kind of confident long-term guidance is like music to an investor's ears. Okay, so zooming out from the individual stocks,
All of this is playing out against a very, very unusual and, frankly, murky economic backdrop. The typical signs we use to see how the economy is doing, well, they're giving us a very blurry picture right now. You could say the Fed is flying with a foggy windshield. The minutes from their last meeting came out today, and it shows they're pretty divided on what to do with interest rates. And their job is getting so much harder because the economic data they need to make decisions, it's been seriously disrupted. I mean, just look at this timeline for the US jobs report. It's kind of crazy. The last complete report we got was for August. We're supposed to get the delayed September numbers tomorrow, but then the October report, it was just canceled. Not delayed, just gone. And November's report is pushed all the way to mid-December. This creates a massive blind spot, not just for the Fed, but for all of us trying to figure out where the economy is headed. So the poll's verdict today is this. We're looking at a market that's completely on pause. Its next big move is hinging on a single company's report, all while we're flying blind with less and less economic data. I would love to hear your thoughts on Nvidia and the wider AI trade in the comments. Let us know what you think, and we'll see you in the next episode.